Hello traders, Cory Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of May 26th. This article gets updated each week, and I just look at how the market's doing, how I want to be playing it, how aggressively I want to be going long, short. If you're wondering where this article is, you can go to TradeThatSwing.com, stock market analysis and trades. Just click on stock market analysis and trades. It'll bring up that section, and you can it'll be updated there each week, or you can just look through it on the blog when you go to TradeThatSwing.com. And there are some watch lists out there, the current swing trading watch list, some earnings plays, some high momentum names, and I'll be updating that early in the week. The best swing trading stocks list was updated a few days ago, and so you can check out that one again. That's just high momentum names, and some other ones on here for some longer term plays. Let's look at the price action. So all the indices right now, we have the NASDAQ, the S&P 500, the Canadian index over here, the Russell 2000, and the NYSE composite. So all of them at least in short-term uptrends. You can see the Russell 2000 maybe a little bit weaker, but still even at higher swing highs, higher swing lows. S&P, same thing. NASDAQ, same thing. NYSE composite, same thing. Canadian index back pretty much at its highs. The NYSE composite getting pretty close. NASDAQ getting pretty close too. S&P pretty close, but you can see we're in just a slight pullback. So this was kind of an old choppy area, basically where the price topped out. So ideally, we've run back into this area. So ideally, I'd like to see this like hold somewhere around here, especially above these little, especially above this pullback, and I mean ideally kind of in this area. It looks like the NYSE will, this was a huge run up. It's well back into that range. These ones have just kind of got back in there. So I'd like to see that. But conditions overall still good. We're in a minor pullback. I'm looking at opportunities on this pullback because, as we'll discuss, the market health indicators are still good until they're not, and then at that point I'll back off. But right now, price action still pretty good. We're in a minor correction. This is nothing that really we haven't seen during this uptrend before, and so things are still looking okay. Let's quickly look at Bitcoin. This is zoomed out a little bit, so it looks a little squished, but this was basically where we topped out before. Then we had the pullback, and we've run back to that prior swing high. So same idea as what we were talking about before with the indices, with these boxes. So the pullback, we ideally want it to stay above this box. And the real big one will be is if it can break above the all-time high, 110, have a pullback that holds outside and then keeps going. So I call these, they get categorized under what I call range rules. I discuss them in some of my day trading courses, and it's basically we just want like boxes moving up. If we're in an uptrend, it's like, these kind of areas should be moving up. As opposed to, if it drops back down here, then it's like, okay, well, we had this box here, it's moving up on this one, it's down on this one. It's a little more conflicted situation, whereas it's much easier when you have a box here and then it chops around here. Okay, you got a box there, moves up, box. And those are what I like. So we can use these kind of areas, and so we discussed some opportunities to get in throughout this rally based on a similar concept. And now, like the big one for the long-term picture is, can it break above this 110, move above it, and then hold on the pullback, and then start moving up again? I like that as kind of the next buying opportunity. Because right now, we're kind of at that resistance area. We'll see how it acts. Or I don't like to think of it even as resistance, because that gives the mental idea that price may not get through it. I think of support and resistance more as inflection points, so that I don't get those, sometimes connotations where it's like, oh, support, it should hold, or resistance, it might get rejected. I don't know that, right? All we know is that this in the past was an important area. Price reversed off of it. So now when price comes back to it, it's like an inflection point. I get to decide how I want to trade around that point based on what the price action does around that point. I'm not making a preconceived idea that it will necessarily reverse or spike through, but I am noting that, hey, this was an important area. Trade accordingly. The gold miners, still in an overall uptrend, a little more complex pullback here as the market got stronger. And gold, same thing. So still an option here for swing trading. They're still in an overall uptrend. They're still doing pretty good. But with the overall stock market running and tons of stocks like just kind of exploding recently, we have a lot more options. It's a few months ago, gold was pretty much the only sector that was doing good. And now we have a lot more. Let me just move so you can see that chart there. Yeah. Let's look at the market health indicators. If you want to see the names, I can move, but not too important since we'll be going through them. Volume, not important to me at the moment. This is rate of change, simply the daily percentage movement of the S&P 500, and low volatility is correlated with rising stock prices, or you think of it as uptrends are generally low volatility. Turning points, downtrends, higher volatility. And as you can see, we had this big spike up, but it's been a lot lower volatility during this rise, and that's good to see. That's confirmation that shows markets are quieting down a little bit. We did have a little bit bigger drop. I think it was about 1.6% in a day. Yeah, it's a decent sized drop, but 2% is where I get nervous. That's really big selling coming in. So we haven't had that. We're still in this kind of uptrending, lower volatility environment, which I like. Or is more indicative of an uptrend, so good for that. Advanced decline line, advancing stocks minus declining stocks is a cumulative number. It is at all-time highs, while the S&P is slightly below its highs, this big divergence. Nothing's 100% accurate, but high percentage when this occurs, a big divergence like this, that the S&P also hits its new highs before having a big correction again. So we're in a tiny correction here, but within somewhat short order we would expect all-time highs again, but that's, again, nothing works 100% of the time. But good, that's definitely a smiley face. Smiley face, this is up volume divided by total volume. We've had nothing recently. The last big signal was we had a huge upside volume day, 90% or higher is what I'm looking for. 90% upside volume means out of all the volume that occurred that day, 90% of it occurred in stocks that moved to the upside. So a huge amount of money going into up stocks, or stocks moving up and pushing those stocks up basically. So that occurred way back here in April. That was the last signal. We haven't had any 90%, or the flip side of that is a 10% upside volume day, which means extreme selling coming in. Haven't had one of those either. This is percentage of stocks above their 50-day moving average, just as a general guideline. It's going to be much easier to make money on the long side when most stocks are moving up more than 50%. We're above that right now. So 60% of S&P 500 stocks are above their 50-day moving average. 58% of all U.S. stocks are above their 50-day moving average. When we are, below that, it's going to be a lot tougher to make money on the long side like it was here. So this was, a sign to get out. Even here, it was like, below, and then it can't really get above. So, going back to here, this pretty much could have all been avoided just by using this indicator. We also had some big downside days that came in over here, alerting us saying, hey, this is scary to be long, avoid it. And then this was, a confirming indicator as well. And that would have been discussed each week. Sectors I'm not covering at the moment, but you could definitely look at some strongest sectors if you wanted. I'm just scanning for stocks that are moving well. The ultimate indicator is how many quality setups there are and how those trades are working. So using your own kind of trading as a feedback mechanism. And lately things have just been what I've been looking at. It's moving really well. So I have no reason to back off at the moment. If my stocks that I'm looking at start to not be triggering and they seem a lot more sluggish, or fewer setups are starting to come in, then that's a warning sign to maybe back off. But things are still going. There weren't as many setups when I ran the scan, my swing trading watch list this week. There were not as many this week as there were the prior week. In the last couple weeks, there were just a ton, and they were moving super well. And this week there were less, and they've kind of moved a bit, but we got the little pullback this week. So I think this week will be really telling on whether we continue to pop after this little pullback or we get that a little bit deeper pullback. What I'm doing right now, always enjoying the movement by day trading. Always looking to gain exposure in long stocks. We got stocks that are hitting targets or getting trailed out as we've had this run. Looking to get that money back into play. Things are moving well. Bitcoin moving well as we discussed, but it's kind of right at that inflection point I talked about. So waiting for that to kind of see how that plays out, whether we get another entry point a bit lower, or if we get the break above the all-time high and the pullback and hold. That would set up the longer term picture. And yeah, day trading, we get to trade every day. There's opportunities. With swing trading, we have these periods of inaction and periods of action. Right now we're in a period of action, but if we get a deeper pullback or something, then it goes back to, okay, we'll just sit on the sidelines, wait for things to improve again, just like we had during that decline here. Unless you were taking short trades, which some of you do, some of you don't. I'll occasionally take a few, but I'll usually just end up waiting for the moves up. So this would have been a period of pretty inaction. We're not doing a whole lot with the swing trades, and this is a period of action. So depending on what kind of trader you are, you may want to incorporate, if you find that tough to just sit on your hands, maybe you want to incorporate some day trading or something like that as well to take advantage of whatever movement there is, whether it's to the upside or downside during the day. You can check out some trading courses on that. And yeah, that's your weekend update. Enjoy the holiday on Monday, 26th. U.S. stock market is closed, so just be aware of that. Happy trading.